this presentation is posted on our website under Dollars and Donuts, and there's a link at the end of this presentation to get to our Fiscal Services Publications website. So with that, I will let me get started here. To start with, the first thing I'm going to do is kind of give a big picture overview of the budget, the state budget. And then the next thing we'll talk about are components of budget development. There's 6 concepts here that I want to touch on. I'm going to touch on the revenue estimating conference, the adjusted revenue estimate, the expenditure limitation, reserve fund requirements, the taxpayer relief fund, and then lastly, there's a graphic that hopefully pulls all this together, and it will show the distribution of general fund surplus dollars, and hopefully that will help to in the understanding of the flow of general fund dollars. And then lastly, like I mentioned, we'll review the governor's recommendations for 22 and 23. So for the budget overview, the state budget consists of numerous revenue sources, including but certainly not limited to a variety of taxes. There'll be income tax, corporate income tax, sales taxes, fuel taxes, state wagering tax, and the list goes on. It also consists of a variety of user fees, federal funds, interest earnings, and fine revenues, amongst other things. By statute, all revenues that are remitted to the state are directed to specific funds and to be used for specified purposes in the code. Some funds have more specific purposes, others are more general in nature and have more discretion. So in total, these revenues amount to approximately $17 to $18 billion per year when added up. And this is as of comes from the Iowa Comprehensive Annual Financial Report that is published annually by the state accounting enterprise. Iowa's general fund is the state's main operating fund, and it's also the fund where most all of the discretionary spending is provided. And it is also the fund that receives most of the attention during the legislative session by the media and legislators alike. And it's also probably one of the more complicated funds. So this presentation will focus primarily on the general fund. It'll focus entirely on the general fund. So the revenues that make up the general fund, this pie chart shows the total revenues collected in the most recently completed fiscal year. In fiscal year 20, which ended last June 30, the state brought in $7,930.6 million in revenue, and that's net revenue after refunds. The thing to take away from this chart is that 90% of all the revenue to the state general fund comes from 3 sources. That'd be personal income tax, sales tax, and corporate tax. And as you can see, 50% of all the revenue comes from personal income tax and 30% from sales tax. And over time, those 2 sources have remained relatively constant as far as the proportion that they make up of the general fund. Corporate tax will fluctuate annually. In 2020, they made up about almost 8% of the general fund revenues. And then you have the remaining 10% is a variety of taxes and fees and fines. Other taxes that get deposited into the general fund would be things like beer tax, insurance premium tax, inheritance taxes. Under the transfers line, a good portion of that comes from the lottery profits. On other receipts and transfers, a sizable portion of those of that 4.1% comes from the Liquor Control Trust Fund, the liquor profits. So on the spending side, this pie chart shows the appropriations that occurred in fiscal 20. And the one thing to take away from this chart is the two large items, school aid and Medicaid, which make up the vast majority of the spending out of the general fund. Total appropriations in fiscal 20 were $7,832.9 million. School aid made up 42% of the total spending. Medicaid, nearly 20%. Together, those two items, those two line items in the budget, that's 60% of your total spending from the general fund. Other significant pieces of the budget would be Department of Corrections makes about 5% of spending annually. Higher education, which includes the Regents institutions, college, community colleges, and then college student aid, about 10%, 11% of the budget. The state also provides appropriations to pay counties for reimbursement of the property tax credits. Those would be things like homestead tax credit, your ag land tax credit, commercial property tax replacement, and elderly disabled tax credits and those things. That's going to make up about 6% of the budget currently. So everything else in state government that gets funding from the general fund comes out of that remaining 16%. And that'd be things like, the judicial branch, legislative branch, departments that operate state government, the Department of Public Safety, human services institutions, and the list goes on. So everything else in state government just has to come out of that remaining 16%. A couple other concepts under the budget overview I want to touch on is the surplus carry forward from the general fund. These are dollars that are carried forward from the previous year's surplus, what we call the ending balance. After the funds, they're carried forward after funds are subtracted from that surplus and deposited into the state's reserve funds and the taxpayer trust fund. Actually, it's the taxpayer relief fund typo. And the other concept here I want to touch on is reversions, which is not quite as significant, but it's an important concept. Reversions are the unspent appropriated dollars that are remitted back to the general fund at the close of the fiscal year. Appropriations that are made, an appropriation is actually a spending authority that's a budgeting tool. Agencies don't always spend all of their appropriation throughout the fiscal year. And so whatever is not spent by a department comes back to the general fund as a reversion. And here's a summarized version of the general fund budget, general fund balance sheet. I'll point to the column on the far right, the actual fiscal 2020. You can see the net receipts that we talked about of $7,930.6 million. We added the surplus carry forward of $195.6 million. So you have total resources that were available of $8,126 million. On the appropriations, the net appropriations, after you subtract out the reversions, they totaled $7,820 million. And so you had a surplus in the general fund after all the books were closed of $305.5 million. So you can kind of compare that to 4 years ago, where we actually ended the fiscal year in 2017 we actually had a deficit that had to be corrected. So it was the ending balance was zero, and since then the surplus has been increasing, which is a good thing. Next, I want to talk about like I mentioned, the components of the budget development. And the first component is the Revenue Estimating Conference. The Revenue Estimating Conference is comprised of a 3-person panel. It is made up of an appointee from the legislative branch, an appointee from the governor's office, and a third person who is agreed to by the other two members. So our legislative appointee is Holly Lyons, who's the director of the Fiscal Services Division. And the appointee from the governor's office is David Roeder, who's the director of the Department of Management. And those two persons have selected a third person, David Underwood, who is a retired business person from Mason City. And those three make up the Revenue Estimating Conference. The Revenue Estimating Conference meets at least 3 times per year. They can meet more than that. Last year, they did meet 4 times because of the pandemic. They held a meeting in May, just prior to the legislature coming back out of recess. The thing about the Revenue Estimating Conference, the General Assembly and the Governor are required to use the REC December estimate as the basis for the next year's budget. So the REC met on last December 11th, and they estimated the official estimate for fiscal year 22, which the governor's budget is based on. However, if the December estimate is lowered in a later meeting, the lower estimate is required to be used for the budget. And if that estimate does become lowered, then the governor is required to submit a revised budget within 14 days. And here's a table that goes back to May, and so you can see what the REC was up against. They had to come in May and revise the March estimates that they had made. And because the economy had shut down for about a month and a half, they revised the fiscal 2020 estimate downward by about $149 million, about 1.8%. And then they lowered the fiscal 21 estimate by about $360 million, or 4.4%. And the fiscal 21 budget was the one that they were trying to enact at the June session. The next is a concept and a number that's very important in budget development. It's something that you probably won't see. It's something that we calculate behind the scenes. And it's called the adjusted revenue estimate. It's really easy to calculate. It's the adjusted revenue estimate is equal to the REC estimate, whichever REC estimate we're required to use, plus any revenue adjustments that are enacted that were not part of the REC estimate. The adjusted revenue estimate is used to help determine some key things in the budget. And they include, and we'll talk about these in more detail in a minute, they include the expenditure limitation. It's used to calculate the maximum balances associated with the reserve funds. It's used to calculate the amount that's to be transferred to the Taxpayer Relief Fund. And then lastly, there's a provision in code under the Economic Emergency Fund, which is one of our state reserve funds. It's a provision that's a contingent appropriation that can be used to eliminate a general fund deficit at the end of the fiscal year when the books are being closed. And we'll address this again when we get to discuss the reserve funds. So this table shows how we calculated the fiscal 21 adjusted revenue estimate. As you can see, we started with the May REC estimate, which was the lowest estimate that was made by REC for fiscal 21, and that was $7,876 million. Then there were 4 bills that were passed that impacted the general fund, and they were a combination. Some increased revenues, some decreased. Fiscal 21, the revenue adjustments were not that significant. Sometimes they can be very significant. But these four bills had a net impact of reducing the REC estimate by $39.1 million. So really the adjusted revenue estimate is pretty simple math. You just add up those that column and you get the adjusted revenue estimate of $7,837,000,000. The expenditure limitation. Expenditure limitation was established back in 1992, and it places a limit on how much the General Assembly and the governor are allowed to appropriate from the general fund. The primary purpose was to help ensure that you would have the passage of a balanced budget and that you would have a mechanism put in place that would feed money to your cash reserves. And over time, it's worked pretty well. So factors in calculating the expenditure limitation, what we do is we take the appropriate revenue estimate from the REC, and that gets multiplied times 99%. Any new revenue increases, these would be like revenue adjustments not included in the REC estimate that are increasing revenues. You multiply those increases times 95%. All revenue decreases are applied to the expenditure limitation at 100%. And then the surplus carry forward gets added to the expenditure limitation at 100%. And this table shows how we calculated the expenditure limitation for fiscal year 2021. Number one up there, you can see we started with the May REC estimate of the $7,876,000,000 and multiplied that times 99%. And the result is over here on the right. Then we take the revenue adjustments and we split those apart, and all of the increases in revenue from those revenue adjustments are multiplied times 95%. All the decreases are applied at 100%. And as you can see, the revenue adjustments were not that significant, so it was not that big of a change. But it changed from a negative 39.1 to negative 39.2 that you would subtract off just because the numbers were so low. But then down on number 4 here is a surplus carry forward. At the time that we were working on the budget, the estimated carry forward was $264.4 million. So that got added at 100%. And so you just do the simple math on the right-hand column, and you add up all the numbers, and the expenditure limitation came up to be $8,023,000,000. Let's talk about the reserve funds. The state has 2 reserve funds. The first one here we're going to talk about is the cash reserve fund. Iowa code requires a maximum balance in the cash reserve fund that cannot exceed 7.5% of the adjusted revenue estimate. Any monies from the surplus, the surplus is what feeds the cash reserve fund. Any monies from the surplus that are in excess of this maximum balance, once that maximum balance is reached, gets transferred to what we call the Generally Accepted Accounting Principles Deficit Reduction Fund, or GAAP Deficit Reduction Fund for short. This account was established back when the expenditure limitation was created back in '92, when the state was transitioning to GAAP accounting. And in that time, during that transition, the state had a GAAP deficit that had to be corrected. And so over a 2-year period, that GAAP deficit was paid down. And so this fund is still on the books, but it is pretty much inactive because we haven't had a GAAP deficit since 1993, I believe. I think it was paid off in 1994. So if there is no GAAP deficit, which there is not, all the excess funds beyond the maximum balance in the cash reserve fund are transferred to the economic emergency fund. The cash reserve fund can be funds appropriated from the cash reserve fund have to be spent for non-recurring emergency expenditures. If the appropriation has to be the only subject matter of the bill. One thing about this is that the term emergency expenditures is not defined in the code. So when appropriations are proposed from the cash reserve fund, the term emergency expenditures gets debated rather vigorously. Any interest earnings from the cash reserve fund are deposited into the Rebuild Iowa Infrastructure Fund, which is another fund in state government that is used to fund state infrastructure projects. Next fund is the Economic Emergency Fund. This has a statutory maximum balance of 2.5% of the adjusted revenue estimate. Like I mentioned before, it receives the excess funds from the cash reserve fund and the deficit reduction account after those obligations are met. Funds here may also be appropriated for emergency purposes, or they can only be appropriated for emergency purposes. And this fund has a unique provision, like I had mentioned before, where there's a contingent appropriation where up to 1% of the adjusted revenue estimate can be appropriated to prevent a general fund deficit if certain conditions are met. And those conditions are pretty easily met if I think one of them is the governor has to submit notification, and the other one is you have to have a deficit. And this is really to protect or to correct any deficits at the close of the fiscal year when the books are being closed and being reconciled. We have a hold open period in state government where revenues and appropriations that come in 60 days after the close of the fiscal year that get attributed back to the fiscal year. Sometimes you don't always know what those amounts are going to be, and so you can sometimes end with a deficit. And I think this has happened like 2 times before. The last one was 2017, and this provision was kicked in. So the purpose of it is to where if you have a small size deficit, which is less than 1% of the adjusted revenue estimate, which right now that's about $78 million. But what this does is this allows the deficit to be corrected without having to call back the legislature into legislative session. However, if the deficit was larger than that 1% of the adjusted revenue estimate, then the legislature would likely have to come back into session and fix the problem. The other provision that's associated with this, if this provision is used, then there's an automatic appropriation in the next fiscal year that kicks in from the general fund that pays back whatever was used out of the Economic Emergency Fund to correct the deficit. Okay. The other unique thing about the Economic Emergency Fund is that it provides a standing unlimited appropriation for what we call performance of duty expenses. A standing unlimited appropriation is just an open-ended appropriation that has no cap. Performance of duty is an appropriation that's under the authority of the Executive Council. They approve all expenses, and these are primarily expenses for emergency related expenses that are not otherwise budgeted in state government. And so this is primarily has been used in the past to match FEMA dollars for disaster mitigation. And they can also provide, in some cases, match to local communities to match their FEMA dollars. But the Executive Council is made up of the elected officials, executive branch elected officials would be the governor, treasurer of state, Secretary of State, the Auditor of State, and Secretary of Ag. And then the Attorney General provides the legal counsel for the Executive Council. And then lastly, all interest earnings in the Economic Emergency Fund are also transferred to the Rebuild Iowa Infrastructure Fund, just like the Cash Reserve Fund interest. So these tables just show how we calculated the fiscal 21 adjusted revenue estimates. We started with, for the Cash Reserve Fund, we multiplied the adjusted revenue estimate times 7.5%. So the maximum balance in the fund for fiscal 21 was $587.8 million. For the Economic Emergency Fund, it's 2.5% of the adjusted revenue estimate. That balance ended up being $195.9 million. So if you ever hear, and maybe you've heard in the press or in news releases that Iowa has a 10% of their budget in reserve, this is at 10%. So the 7.5% and the 2.5% is the 10% that they're talking about. Okay. Next concept is the Taxpayer Relief Fund. This was created back in 2018. It had a predecessor called the Taxpayer Trust Fund that was created in 2013. So this fund replaced that. The Taxpayer Relief Fund can receive a portion of the previous year's general fund surplus after the 10% reserve fund requirement is fulfilled. So you have to have excess dollars first. We do a calculation to determine how much goes into the Taxpayer Relief Fund. And the amount that the fund can receive in a given fiscal year is limited to the difference between the actual net general fund receipts for the preceding fiscal year and the adjusted revenue estimate used in establishing that budget for that preceding fiscal year. So in other words, when we looked at calculating how much could be transferred in fiscal 21, we had to go back and look at the actual general fund receipts in fiscal 20 and subtract from that the adjusted revenue estimate that was used to establish the fiscal 20 budget. Monies in the Taxpayer Relief Fund can only be used pursuant to an appropriation by the General Assembly for tax relief. And the code says, but not limited to, increases in the general retirement income exclusion or reductions in income tax rates. The Taxpayer Relief Fund's predecessor, Taxpayer Trust Fund, used to have a tax credit associated with it, but that went away when the fund was replaced with the Taxpayer Relief Fund. Now any dollars in the Taxpayer Relief Fund have to be appropriated by the General Assembly. If they aren't appropriated, they will sit in the fund. So any general fund dollars that are in excess of the amount that we transfer to the Taxpayer Relief Fund, that gets transferred back to the general fund, and that becomes that general fund carry forward amount that we talked about previously. So here is how we calculated the fiscal 21 transfer amount to the Taxpayer Relief Fund. Like I mentioned, we had to go back, in determining that amount, we had to go back and look at fiscal 20. So we looked at what the actual receipts that came in fiscal 20. We went back and pulled the adjusted revenue estimate that was used in establishing the fiscal 20 budget. And that difference was a revenue growth of $91.5 million. Well, something unique happened, which in the last session, which was a one-time thing, where the General Assembly passed House File 2642, and they reduced the amount that was going to be transferred to the Taxpayer Relief Fund. So they reduced the calculation by $70 million. So really, what ended up happening is that the transfer amount was reduced from $91.5 million down to $21.5 million. So, but still that difference is positive. Sometimes you can have the difference be negative because you can have your adjusted revenue estimate, if it exceeds your year-end revenues, then your number is going to be negative, which means that you would not transfer any money. So this table down here is the actual taxpayer relief fund itself. In fiscal 21 had a beginning balance of $74 million. The excess general fund surplus dollars that were transferred get added to that $74 million. So you had a balance of 95, or you had revenues totaling $95.5 million to the fund. General Assembly did make a couple of appropriations to the tax credits. When you back those off, then you have an ending balance in the taxpayer relief fund of $90.2 million. Okay, here is a graphic that hopefully will help you to understand the flow of the general fund surplus dollars and the various reserve funds and the different funds. So what we do is we start with the general fund budget. This graphic is a series of barrels and spigots. So we have receipts coming into the general fund, tax refunds going out. At the time we're looking at this, this graphic is based on the budget that we were looking at back in last June, after the General Assembly had passed the budget, and fiscal 20 at that time was not yet reconciled and not yet complete. So at that time we were looking at an estimated surplus of $313 million. Well, that $313 million then passes into the cash reserve fund. And we had a beginning balance in the cash reserve fund for fiscal 2021 of $587.9 million. Something unique, or kind of unique, happened between fiscal 20 and 21 is that because of the drop in revenues, the adjusted revenue estimate in fiscal 21 was lower than the adjusted revenue estimate for fiscal 20, which means that your maximum balance calculation goes down. So this table shows that in order to reach the new maximum balance, the cash reserve fund had to give back $100,000 to the surplus. And I think I have a typo here where it says 303.1. That should be 313.1. So I apologize for that. So that $313.1 million then flows into the gap deficit reduction fund, which, because we have no gap deficit reduction, that 313.1 passes on through to the economic emergency fund. And we have the same situation here where the maximum balance is lower than what it was in fiscal 20, so money had to be given back to the surplus. Actually, when you give the money back to the surplus, it actually just increases money going back to the general fund. You subtract off the money for the performance of duty, and at that time we were looking at an estimate of $16.7 million that was going to be spent for performance of duty expenditures. And we did the calculation for the taxpayer relief fund. And at that time, when we were working on the budget, that calculation was $32.1 million to the taxpayer relief fund. So then what's left over is $264.4 million that goes back to the general fund for fiscal 21 and gets added to the net receipts. And then you have total revenue budget in the general fund for 21 of $8,102 million. You do the calculation for the expenditure limitation for fiscal 21, that came up to $8,023 million. And the General Assembly and the governor enacted total appropriations of $7,778,000,000, which is below the expenditure limitation. So the budget was in compliance and was balanced. I'm going to stop there. Ask if there are any questions. I'm not sure how many people we have online. Okay, well, this is good practice then. Okay. Governor's recommendations. We'll just keep going through this. This table shows the REC estimates from the December 11, 2020 meeting of the REC. The governor's budget is based on those December estimates. The fiscal 21 estimate went up $92.7 million compared to the May estimate. That's about a 1.2% increase. And then for fiscal 22, they increased that estimate by about $62 million compared to their preliminary estimate of about $8.2 billion back in May. It was almost like a status quo revenue estimate. However, the governor is also recommending a fiscal 23 budget. And so the Revenue Estimating Conference did not estimate fiscal 23. So the governor has an assumption in her budget that revenues for fiscal 23 are going to grow at 4% above the fiscal 22 REC estimate. So that's adding another $330 million to the base revenue estimate. And so that base revenue estimate is prior to her recommended revenue adjustments. The governor is recommending revenue adjustments for that impact 22 and 23. Total revenue adjustments in 22 is minus 12.4 million. And then in fiscal 23, our revenue adjustments take out $183.7 million from revenues. And the largest revenue adjustment is the top one, which is the removal of the budget triggers, the revenue triggers that were enacted back in 2018 in Senate File 2417. And the budget triggers were put in place, and if those budget triggers were met, then there was a contingent income tax system that was going to go into place. And those budget triggers, actually, you had to have a revenue totaling $8,314.6 million, and plus, and also in addition, a 4% revenue growth. The earliest that and if those triggers were met, then the new income tax system would go into place, and that income tax system would, reduce the number of tax brackets from 9 down to 4. It would reduce the top rate from 8.53% down to 6.5%, and it would eliminate federal deductibility. And there's some other things that it would, a host of other things that it would do also. But the soonest that could take place would be fiscal 23. But the fiscal 22 revenue estimates that were set by the Revenue Estimating Conference, they would have to meet those triggers, and in order for the tax system to go into effect for tax year 23. However, based on those estimates, those triggers were not going to be met in fiscal 22. So under current law, the earliest that the tax system could take effect would be fiscal 24. Well, what the governor's proposal here does is it removes those triggers, and so the tax system would automatically go into place in fiscal 23. And so her estimate of a minus 157.2 is a half-year impact, because the new tax system would take place halfway through the fiscal year 23. right. Here are the governor's general fund appropriations. A lot of numbers on this page. It shows actual 20, estimated 21. And you'll notice that the governor is recommending supplemental appropriations of $41 million. The governor's recommendation for spending in fiscal 22 is $8,114 million. That is a increase of $289 million, or about 3.7% compared to her revised 21 budget. She's also recommending appropriations in fiscal 23 of $8.3 billion, which is an increase of $185.7 million over her 22 budget, or a 2.3% increase. Governor's recommending 2 supplemental appropriations totaling $41 million. The first one is to cover part of the Workday contract. Workday is a company that the state signed a contract with to replace the state's accounting and budget system and human resources system. That's an ongoing project, and this is only part of the contract. And then there's another appropriation of $20 million, which we don't have a lot of information on, but it's the additional school financing. And let me see my notes. Like I mentioned, we don't have a lot of information, but what we do think we do know is that it's the funds are going to be used for a grant program to school districts that have provided the option of 100% of in-person learning. But as we gather more information and get more information on this supplemental, we'll pass that along. Here is a list of the significant increases in the governor's budget. I'm not going to go through this whole list, but clearly the governor's main emphasis in her budget this year is broadband funding. She has a recommendation that totals $450 million over 3 fiscal years. So it's $150 million per year for 22, 23, and 24. That is to her objective that she mentions is to have the state completely covered with broadband service by 2025. The second significant increase is an appropriation of $35 million to the Technology Reinvestment Fund. Technology Reinvestment Fund is used to fund, well, just like what it says, a host of technology projects, and those the General Assembly appropriates money for those projects in the Transportation Infrastructure Budget Sub. And of that, normally the Technology Reinvestment Fund receives between $17 and $18 million from the Rebuild Iowa Infrastructure Fund. This year, the governor is recommending $35 million from the general fund. And of that $35 million, $17 million of it is being used to fund that Workday contract in fiscal 22. And her recommendation for 23 also funds another $6.2 million for Workday in fiscal 23. The only other things I'll mention here is Medicaid and school aid. These numbers are a lot lower than they have been in the past. And it's primarily due to the COVID-19 pandemic, which is affecting Medicaid because we're receiving a lot more federal money through the change in the FMAP rates. Medicaid has a rather large surplus and ended the fiscal year 20 with a rather large surplus. So less state money is being needed to fund Medicaid. This does not include, we don't know yet what the capitation rates are for the managed care organizations, and that can run, in the past that has run anywhere from $60 to $70 million per year. So, but we're not sure how the pandemic is affecting that. In state school aid, the governor is recommending 2.5% growth for state aid because the certified student enrollment that from last October is down by about 6,000 students. And if you listen to Mike Guanci's presentation on school aid yesterday, he addressed this. That has a significant impact on fiscal 22 and growth in the per pupil growth rate for fiscal 22 now only equates to about $20 million. Normally, in a normal year, 2.5% growth would be somewhere in the neighborhood of $120 to $130 million. So those are significant increases. Here's the governor's balance sheet. Fiscal 22, you can see her total revenues, total resources available are $8.4 billion. Her expenditure limitation is $8.367 billion. When you do the math and subtract off her recommended appropriations, she's ending with a surplus of $340.9 million in fiscal 22. And then her fiscal 23 budget has an estimated surplus of $421 million. The governor's reserve funds, her fiscal 22 reserve fund balance between both cash reserve and economic emergency fund total $825.3 million, and that grows to $841.2 million in fiscal 23. And both those funds would be at the statutory maximum. Taxpayer relief fund under the governor's budget for fiscal 22, there's $131 million that gets added to the balance in fiscal 22. So the total balance in the fund is $222 million. And that's going to be unchanged in fiscal 23. We can't do the calculation like we would for fiscal 22 yet. But that she's not recommending any spending from the taxpayer relief fund in fiscal 22 or fiscal 23. So those dollars will remain in the fund. With that, here is some links to our website. You can go to our publications link. And if you want to download this presentation, just go to Dollars and Donuts on the list. There's also a link for our Twitter account. And you can also subscribe to various fiscal division products with the last link at the bottom. Just go and fill out the forms and select what products you want. With that is the end of my presentation, and certainly open to any questions.